All right, folks, welcome to a trade recap. This is my missed trade recap, which is a 5 hour missed trade recap, as well as a lost trade recap. Today, unfortunately, we got caught in the trap of SMT in the higher time frame, especially daily and the weekly. As you guys know, the daily time frame SMT affects our bias. That's why the daily time frame, I said, the daily time frame of the short-term journal case was very important. And unfortunately, today we got caught in that trap. What happened here was a what happened here was that the market had SMT during the time where I had my bias locked in, right? So around 6 a.m., I had a bearish bias, but I didn't see that there was because before the SMT occurred, right? Because around 6 a.m., I was just analyzing, or no, before the SMT occurred, I was like, okay, I was analyzing the chart, doing all the good stuff. And eventually I was like, okay, I am bearish. I didn't see no SMT. I should have looked at the quality pair at the higher time just to make sure, because this seemed too clear. I was like, I don't know why the market is going back up from here. I did not even know why the market is going back up. This seemed way too clean to not go lower. Right? It seemed way too clean to not go lower. It seemed like this is a very easy short to take, right? Like how the freak the water the market not take out this low. But when I checked after I lost, I checked the quality pair. Oh, there was an SMT with DXY. That's why this low didn't get what do you call it, souped, as well as that's why this move looks too good to be true. Because I mean, it's not too good to be true, but usually people will get caught in this trap. But this, for shorting, this may look like beautiful, like a retracement to push it back down. But as you guys know, SMTs cause reversals, right? SMTs are basically turtle soups. So we're supposed to be long on this day. I'm not even gonna talk about my bearish bias, but I will talk about the higher time frame here. On the higher time frame, my higher time frame bias wasn't from the weekly; it was from primarily the daily time frame. On the weekly, we did have weekly ERL to IRL, a daily weekly steer to downside, but that's the long-term journal kitty, which we don't really care about. The short-term journal we care about, but during this time, you can see there's SMT with DXY. DXY had a daily IRL back to ERL as a daily steer to the upside, which that is what we didn't see, and that is what got us caught on this trap of being blind. So I'm not gonna talk about the bearish bias or bearish trade context narrative, because it's overall a pattern trade. That's the context. The narrative doesn't matter if you have your bias wrong. This is why I prioritize the bias, right? There's this, you gotta prioritize both, but you gotta prioritize that bias even more, because you see the bearish bias is clean. It gave us the right setup, give us the right number one, get repurged, everything was correct, and it still failed, right? It's nothing is guaranteed in the market. You could definitely fail the best setups that you ever see. It could definitely fail. Those setups could definitely fail, but that's not the cause. The cause is that anything can be patternized, right? The context to the downside could be patternized, to the upside could be patternized. So you want to have the right draw on liquidity, the right bias to avoid taking the wrong pattern. What we're trying to take is a logical pattern which aligns with the draw on liquidity, and unfortunately today that didn't happen. So market first, going to low time for straight to execution. I'm not gonna talk about anything else. I had everything here, right? We had a repurge. There was not about it. I had this CRT high. And eventually, once we had the repurge, I was looking for this number one. Eventually, we didn't have legit high. We had an equal high, so the high got purged. I'm looking for the right number. I'm looking for a VAD had to get formed, and looking for that VAD had to get purged. And then I'm looking for the right number one. Eventually, we formed the VAD high, purged it out, gave us the right number one, tapped it once, and then instantly went lower. Since I'm going with a higher time draw liquidity, my take profit is going to be objective. And eventually it came back down to entry. In this case, when the market did this, I didn't get in the trade. I couldn't get in the trade. I did get in the trade, but the entry position was so widened, so I basically got out of the trade instantly, and I actually lost $25 on that trade. Simply because I was like, man, the market tapped my entry and got out my entry in less than 3 seconds. I couldn't have time to react out of it. My computer's even that strong to reflect. Probably wondering, well, your computer's not that strong, because you could react fast, but keep in mind that it's not that strong to do it in milliseconds, right? It's not that strong. And I'm like as a human time, we're not that fast, right? So if I were to set a limit order, okay, cool, but limit orders mess up your entry because when the market is around here, this bullish candle in my broker, it was at already at my entry while this was all down here. It didn't make sense. You can see it doesn't make sense. That's why you need to guys. This is why I do this. This is why I wait for the broker, and the broker I wait for is forex.com. I don't wait for the Awanda broker, because the Awanda broker, they give me the candles with volumes in there. I don't like the volume candles. I like the candle have like this specifically, right? But I always trust this. I always try to trade if you want anything, right? So I waited for the market to go back up, enter short, and yeah, you can see this. There was a big bullish candle. This was from the Iran news, but that is not what the news. It was about the total soup that happened. There was a total body soup right over here. Now let's talk about the right trade. This is a trade we just apparently mistaken. I will talk about the lesson of the trade, which the lesson is during my trading time, I must always look at DXY and GU's daily time frame for SMTs. I must always do it like not always. I must always, and I will always look at like daily basis. Like every couple minutes, I will look at DXY and GU just for a higher time from SMT, because those higher time in this case the higher time from SMT happened during my trading time. Usually it happens before I trade, before my trading session, but in this case happened during my trading session, because I said to my Discord right over here, if I go back to my chat here, I was like, I'm looking at the long the daily for VIGAP if it gets tapped. Otherwise, I'm not looking for another trade. You know what I'm saying? So let me go get the text here. Right over here, I'm looking to. Oh nope, that's not the right one. Right over here. Right over here. I said right over here. If it hits daily for VIGAP, I'm looking to long. Fuck, like I said, I said that F4 just, I was like, damn, what I got long for it. But it definitely made sense to long it up, right? It made way more sense. It was way more clear. It was a bigger. It needs to be closing at a fair price. But if you were to trade the London session, that shorting opportunity was beautiful. But keep in mind, the bias changed right when Neo come around. And guess what? The London session, you're not gonna objectively hold it down here, because you trade in London session. You're trading Thursday, Friday, so you must go first to take profits. Your take profit is gonna be just as low, right? So if you trade London session, the London session was the one to deliver that bearish move. So if I take this trade to the London session, it would have delivered, right? Because the London session, you go for a fixed RR, take profit, and you target this low by itself. You're chilling here, right? If you go for right over here, fixed RR, you're making a 1.6 RR. That's not that much. But you could possibly make your stop loss a little tight. You could possibly make your entry a little tighter, give you that advantage on the RR. But the lesson was I want to deliver this downside. But the drone liquidity changed during the time where I was analyzing the market, and when I was analyzing the market, the drone liquidity literally changed to bullish because of the SMT. So then the lesson is primarily to, even when I'm trading, even when I'm locking my bias, I must analyze DXY and GU all the time for SMT on the daily time frame, primarily daily. If it's a 4-hour SMT, I don't really care. The 4-hour SMT is just gonna for me to take a trade. The daily time frame is not about the trade; it's about the bias. Which you can see, I'm not even emotional. I did feel some sort of emotion. I was like, fuck, man, I waited a whole week just to take a loss, and I fucked it up. But it's human error. People make these mistakes. Everybody makes these mistakes. And yeah, it's normal. People will make this sort of mistakes. And my goal is to just pen and paper that shit down and go on forward to the next trade. And constantly read that. So from this day forward, I'm gonna constantly look at DXY and GU at the higher time frame for SMTs, so I can be careful when I'm doing that, right? I might even bring that color up even higher. So Yeah, you can see right over here, the SMT with DXY. So now go to the high time frame to the right bias, which the right bias didn't go with the long-term liquidity. You went to the short-term liquidity. With the short-term liquidity, we will always prioritize the short-term liquidity of the long-term liquidity, because short-term liquidity will overall lead to long-term liquidity. If you have the long-term liquidity wrong, short-term liquidity gonna give us the right way, because you overall inevitably lead to the long term. So now daily time frame, we have a daily SMT IRL to ARL, a daily SMT CRT to the upside on the 4-hour time frame for the market context and narrative, as well as we had a classic option profile to the upside, Tuesday low of the week. So since we have a big weekend account with the weekly, we need to close at a fair price. So we need to close back up higher, as well as we are buying below the daily opening price. And we're looking for a near reserve profile, one accumulation, 5 mid-mission, non-expansion. You see as well the 17 o'clock. If I'm bullish, I want the 16 o'clock to make the high of the, I want the 17 o'clock to make the low of it at the high. In this case, the high there, so I'm looking for a near reserve profile 1. My CRT is right over here. And I'm going for not a objective take profit. I'm going for a fixed RR, since this take profit, this is since today, it goes against the long-term liquidity. I'm going to go just primarily on the fixed take profit trade, which is what we had a daily range here: stable low, stable high, stable high, stable low, premium discount, which have discount daily range to daily range high, as well as we're in discounts want to buy up. As well, we have a 4-hour key low, which is this, London session low, and we had a fair value gap around here, as well as what else do we had here? We had a bullish order flow. The order flow was relatively bullish. We rejected below the low, so we're looking for a break above the high, and that is what we had for the long term. So going down to the lower time frame, we're looking for the right time to purge and Nevada low. So looking at the lower time frame, the 1 a.m. low did have a legit low, bearish bullish candle, as well as looking for the right time to purchase in 6 a.m. and 10:30 a.m. 6 a.m. came around, 6 a.m. purchased out the low. This is the candle. This is the biggest candle. Why not this candle? Simply because this candle right over here, they didn't go with this candle. So this, our model 1 is primarily this candle. So I'm looking for a closure above this candle, which it did. Eventually, I'm looking for it to get. I'm looking for a model 1 entry here. Well, I'm looking for a model 1 entry simply because of the. Well, I'm looking for the right model 1. So now I'm looking for a resistance block entry number 1. So I'm looking for a resistance block to this entry. In this case, the wick is so big that. Since the wick is so big, we're gonna enter on the body itself, and we're gonna put a stop loss below the 50% mark of the resistance block threshold. Eventually, eventually we have to put us below a safe 50% low, which is this low right here. Why not this low? Because our are gonna be off by a lot. This right here is a safe low to put it inside of. So we're gonna put a stop loss right down here. Entry here, take profit, can be a fixed 5 hours. You guys know the resistance blocks offers a 5 hour all the time. Why? Because the resistance blocks are total soups, right? As you guys know, obviously. And eventually this one's the one to deliver. And to hit my entry, looks like that just seemed weird to me. It was like, bro, that's that freak the news. News doesn't do anything. News just brings volume to the market. And this right here was a total soup, total body soup, and eventually went up higher, hitting our take profit and eventually reversing from there on forward. And you guys probably wondering, well, didn't the market do the explosive price move to the upside? Aren't you supposed to enter on the model 1 itself? In this case, it didn't really close. It didn't really do a explosive price movement. If it did a explosive price movement, which if it did that, it would have to be somewhere around here. Then that would have been considered as an explosive price movement to the upside. Then you would enter just a model 1, put stop loss right below the 50% of the threshold of the resistance block. And that would have been it. Still, you could have taken either of these, right? You could put an entry here and go for a 3RR here. You would have still been in trade. Next week is highly likely to go and deliver it here. Next week is probably gonna regardlessly deliver, right? So you're going to be chilling regardless. But in this case, in my eyes, as of what I see right here, right now, this did not do a very explosive price move to the upside. If we were to do an explosive price move to the upside, it would have had to be somewhere around here. Then I would consider taking the model 1 itself and putting my stop loss right below resistance block, 50% of the resistance block. Why not the body? Although the wick doing the damage body story, since this wick is so big, it's highly to get filled, right? As you guys know, when the wick is very big and thick, pause, it will usually get refilled, right? In this case, this would have made way more sense. That the times where it wouldn't get filled is when the wicks are small, right? In this case, the wick is big and humongous. Pause. Eventually got tapped, and eventually when I'll go for 5 now take perfect got met overall. So this is my trade this is my missed trade recap, which is a 5R as well as a lost trade recap. And the lesson overall is to during when I'm trading, I must and I do analyze DXY and GU for higher type SMT, the daily time frame, right? So I'll go in between from 4 hour to hourly to I'm gonna go for from 4 hour to hourly to daily, constantly during the trading day to look if there's gonna be any SMT that may affect my bias. And the SMTs that I primarily care about is, as you guys know, CRTs and IRO to arrow. As you guys know, that's the only one you should really care about, and those are the only ones, right? But yeah, so the lesson is to always every day trading day, because the drone looking can change during that specific during that specific hour, during that specific trading session. The drone can change instantly, so we must be smarter and enter the trade using we must be smarter and look at and analyze DXY and GU for potential SMT that may occur during that session on the higher time frame daily. And why do I really care about the daily? It's simply because the daily time frame affects my bias, right? As you guys know, shifting locations on a daily time frame. That's why I care about it so much. And what time should we always prioritize? What time should we always analyze on GU and DXY is a daily for daily SMTs, right? That's the only way we should really. That's the only one I care about. And we're gonna do 4 hour hourly because of the executions, right? There may be execution with the CRT with the small range we're trading, but yeah, that's the lesson of the day. Beautiful day. I liked it. This is literally my first time ever encountering such a problem like this. During the Pacific session is my bias when my bias changed, right? So now what I'm gonna do every single day I wake up, when I analyze the market, I'm gonna look at GU and DXY on a daily time frame, 4 hour time frame, hourly time frame, primarily daily because it affects my bias, and the weekly as well, primarily daily because it affects my should have located bias. And I will analyze it throughout my trading hours. So from 6 a.m. to 11 a.m., I'm going to constantly look at GU and DXY to see, okay, there's an SMT here. Should I be careful or not? And that's the lesson overall of today. Thank you for watching. Make sure you guys like, comment, subscribe, share. Show in the description below. I will never make the same mistake again. I never make the same mistake again. This is a beautiful lesson. This is my first time encountering this problem. But when it will logically, that was very easy to know that, the journal could change during that specific session easily. Are you just dumb? Just keep in mind, this is trading, so most of you guys, you're gonna find out how dumb you really are, and this is what we're here for, right? We're trying to be smarter by learning, right? The only way you're gonna succeed is the hardest way, which is literally making a mistake. If I didn't make a mistake and I added up 20K, as I say, I'm at around 20,000 on a live account and trade with a $20,000 live account. If I added a $20,000 live account and took this mistake, that would have been, what is 5% of 20,000? $1,000 loss. Right? Do I want $1,000 loss? No, I'd rather lose fucking way much less in a prop firm than actually losing that in a live account. Prop firm funded accounts are fucking demo, right? I'd rather lose this right over here, demo funded account, than lose $1,000 live account. So this is why I'm so happy I made a mistake. So now I'm literally gonna write it down after this video and constantly read it every single day to not make this mistake again, and I never make a mistake again. I never make a mistake. I never make the same mistake. And yeah, and one other thing is that I'm gonna go away from prop firm trading. Yeah, I don't fuck with it. I ain't gonna lie to you guys. The thing is, as I said, you must make your trades count for you, right? If you take a trade, you must count. If you win, you must count. You know what I'm saying? Because what a prop firm does, you have to make 8% to pass phase one, and that gets you to have dopamine. If you lose, you feel like, yeah, I should get another prop firm. I'm done. Right? I'm not gonna get out of drawdowns. Those problems only occur when you're trading a prop firm, which they're literally designed to destroy you. And that's not the whole reason why I'm getting out of it. Is because it's because of the manipulation they do. Where first of all, the psychology manipulation. The second is like entries, this that, right? The rules, and I've traded live account before. I've traded 500 to 12,000. It's easy money. The reason I'm going back into trading live account very soon is simply due to I like to trade live account way more. I feel way more comfortable trading live account than trading prop firms because, as you guys know, if you lose a lot of trades or you win a lot of trades in the prop firm, they give you fake dopamine. They give you, if you get in drawdown, they'll give you they'll give you no hope, right? It's silly because I'm down, man. Because when you're down in drawdown, you think about buying another one and blowing up his account. So you think about, which that right there is bad match to have. So yeah, I'm gonna move on to trading live accounts only. I don't support any freaking prop firms, right? I won't recommend you guys to any prop firm. I'm just gonna compound interest in my own live account. This is all I like to do because I like my trades to pay off. The reason recently I haven't been making a lot of money from trading is because I'm too dense into prop firm trading, right? Then prop firm trading, literally, they said I risk too much. I made a lot of money, right? I risk too much. Consistency rule, and I risk a little too much, right? Like, how do I risk too much, right? I didn't blow the account. I didn't over risk, but I said over risk, and they literally breached my whole account because of that. I broke a rule, and yeah, that's the reason I'm going back into live trading account is because I would like to make my trades count, and it's way more comfortable for me rather than trading this prop firm. Although if you're very good at trading prop firms, you can milk it out, but I don't got the time to wait 3 weeks because I usually wait 2 to 3 weeks for 1 or 2 trades, right? But when 2 to 3 weeks, 1 to 2 trades, I want to trade to pay you off. If I wait for a prop firm trade, those 2 to 3 weeks, and I take these trades and I'll pass that account, and I still gotta wait. And next 2 to 3 weeks, it can take a long time. And eventually, those 2 to 3 weeks, they're time, and I need time to pay me off, right? So yeah, this is the trade recap. I never make a mistake again. I never will. Very beautiful loss. And yeah, I'm gonna live trading account. It's gonna come back very soon, which I do still trade live account, but at the moment it's not that amount of high capital. 20,000 is nothing, by the way, right? It's obviously nothing. But what I'm trying to do is compound it to probably 50,000, 100,000, and all forward. And with a regulated broker at this time, because last time when I traded the small live accounts, they're usually on unregulated broker, which they fuck me up so bad. 5p spread, oh, that's crazy, all right? But that's why I'm doing this. That's why I'm going to put more capital, but with a regulated broker, so I don't get messed up like that. Although the unregulated broker, I've turned 500. Although I've turned 500 to 12,000, but at the end of the day, where 12,000 go to 0 because I risk too much, right? The max I ever risked on live accounts should have been 5%, but I risked 25%, 100% one time. And the reason I lost 12,000, I risked 95%. The reason I risked 95% is because I didn't want to go to negative balance. And offshore brokers, sometimes some brokers will get your account to negative balance, and you gotta have to owe the fucking broker. And I don't want that to happen, so I risked less, and I still lost it because of slippage. So that's why it matters for you guys so much to risk live accounts, if you're trying to aggressively grow it out, 5% per trade on A plus setups, and there should be no A plus setups. It should be only setups. And DRX have every losing trade. So let's just say 5% per trade, you lose that, you're gonna lose next trade, you're gonna lose 2.5%. Next trade, you're gonna use 1.25%. Next trade, you're gonna use 0.625%. So you're decreasing risk every time, half by half by half by half. So you don't lose, so you don't broke, so you don't break the, so you don't blow out the account. And that's aggressive, by the way. So you should, if you have like around like $50,000 live account, you should be risking 1%. And after 3 consecutive losses, de-risk to 0.50%. In this case, you will never blow out the account. These live accounts, you can go to all to zero, right? So you will never blow out the account. So you constantly pay some drawdowns, but overall get out of drawdown and go forward, right? Just naturally compound interest here, right? It's compound. How to find the whole rate. After flipping accounts left to right, I had to find the whole way, the actual way to actually make money is not by flipping my accounts, because I flipped my accounts. Where did they end up? Zero. I flipped up 500 to 12,000 and more accounts, that I don't have in my mind, but I traded more accounts, but it just gave me bad energy because, overall, where did it go? Zero. Even I flipped it out. But all I have to find out is, compound interest is what creates, wealth. It's not me flipping an account risking 25%. 100%. I should only be risking 5% on an aggressive, which if I have like a $2,000 account, 5% is reasonable, which is $100 per trade. If I'm like 50K, the max aggressive risk is not going to be 50%. It's probably going to be somewhere around 2.5% aggressive risk, right? And sometimes if I'm a savage, 5%, which it should be really easy to go to the risk 5% per trade, and de-risk by every losing trade. So if I have one losing trade, next trade we're gonna de-risk by half, because this is live, right? And that's the goal. And I'm gonna do that very soon. But yeah, see you guys later. Peace out.